I woke up, took a pick at the charts, and I'm like, oh my god, this account should be because my my limit order was at the end log high here, so it got filled. Drawn liquidity was the TP. It got filled too. It got stopped, but I had like two limit orders or something. Whatever. All right. All right, guys. Good morning. So we don't have a recording from yesterday's class, but yesterday during the class I mentioned the daily chart yesterday. Um, so what I was saying is yesterday price went back into range, and in that range it traded into a specific ICTPD area, which is the breaker block here, respected with the daily close. So I'm expecting lower prices going into today. My bias is short, obviously, and I'll be targeting probably might be previous day low and also sell side from Friday. Those will be my main targets. Oh, let me check the OBS. Okay, it is recording. And this is the proof, guys. You can see it. It says recording. See if this works today. Alright. So, also, yesterday I sent a chart during New York session. I mentioned this 5-minute sell model, which was played out. Now we're trading below it. So going into New York Open, this might chop around a little bit. However, I would really want to see it taken out the previous day low. So maybe a Judas swing into the fair value gap on the 5-minute, which is also the low of the previous thick price action. So somewhere here, the CE of that fair value gap could be the potential Judas swing. Let me annotate the daily levels so I don't have to. Okay. Previous day low. And then short-term sell side from Friday. Let's take a look at the 4-hour. Yeah, yesterday's move was such a fake move. So on the 4-hour chart, it traded into fair value gap, and also there's rejection block. Rejection block was respected with the bodies, and it sold off. It inverted a fair value gap here on the buy side run, and then inverted back on the sell side run. At the moment, we are trading into 60-minute fair value gap as well. Let's see a bit more push though. So there's an order block here. Sorry guys. There's an order block here, which is that old range low. I'm expecting some sort of resistance or reaction from that level. Previous day low looks pretty high probability. Let's see. Take a look at this range here. So going into New York session today, what I don't want to see is I don't want to see this fair value gap getting inverted and then the order block has to be respected for me to stay in the short bias. So those are the two things I really don't want to see today. Because at the end of the day, ideally, I want to see price staying below this old range from the Asia session. And I want to see a continuation lower today. For a minute. I'm going to take a screenshot of this actually. I'm going to take a screenshot of this. I want to add it to my journal. This is a clean run, but also not so clean because the fact that they left it for overnight session is the ugliest part of all. It doesn't fit. Okay. Cool. Now here, I haven't checked ES just yet, but I'm expecting ES to get weaker comparing to NASDAQ at these levels. Okay. Here, so there is the breaker block within that fair value gap, which is, I would say this one because it's the lower one, but I'm going to narrow it down to this, just like that. I'm going to alert this in the channel, guys. Okay. Now that that's down, let me type that in my channel. Okay. By the way, XRP, I just saw your DM. I'll definitely take a look at XRP and send the chart probably in the chat. Alright, market opens in about 1 minute. Let's see what happens here. Let's check ES. Okay, so price is respecting the fair value gap. This should actually send right away. Okay, clean those. Cool. Yes, hourly, 50 minutes. 5 minute. Just trying to see if there is any sort of SMT divergence at the lows. Okay, no SMT divergence. Cool. Seems like another 1 minute market maker sell model on ES also. On both assets really. You see, so it's respecting the fair value gap. Because of that, it's sending right away without a Judas swing. So I want to see the reaction from the breaker here. Five-minute SMT. Let's see. Oh yeah, 5-minute bullish SMT at the lows. Go catch, bro. Here's the thing though, this looks like trapped positions actually. So the emergent fair value gap accumulation above it broke below. Let's see if it can rate the highs here. So this looks like a trap for me. And I would rather see price not tagging the highs here. The risk parameter is there, so I'm gonna try to short it. Yeah, the OC order is a really big problem on TradingView. I don't know how to change it, or if it's possible even to change it, because it's pretty annoying. Like hitting your TP and then it doesn't close your stop loss, and if you miss that, you're done. Like, wow, that's a huge wick. Oh, I want to check X Factory. Okay, I thought today had red folder news. No. Canada Hot Red Folder BOJ. Well, yeah, I saw the BOJ news. It was pretty wild. Huge wicks to both sides. Okay, here's what I'm gonna do. So I'm gonna check out this range here. I'm gonna try to get a fill if it leaves a fair value gap or something. And the first target is a short-term sell side. This looks like a sell model to me. SMR. Return back to origin is the first stage 0, lower sell. And now it should be in first stage distribution. Ideally, I want to get leave runners to short-term sell side on the daily, but we'll see. We'll see. I need to get that entry first. Okay. So if it leaves that fair value gap open and retests it, I'm shorting. I want to see the breaker getting violated one more time here. This is 1 minute SMT at the moment. Um, I don't mind fading that SMT divergence because I have the game plan in mind right now. But it seems like we're not going to get the entry. Okay, so the 1 minute SMT is right there. We have 1 minute SMT, 5 minute SMT at the lows, which I believe it's going to be faded. But the problem is it might cause a deeper pullback, but I don't know. Regardless, I'm willing to get that fill here. Okay, for 1 minute SMT's inverted now. Now we have a potential 5 minute here with this low. I think that will be faded as well. Okay, here's another fair value gap. The lower fair value gap might stop me, to be honest with you, but I'm willing to try. So I'm about to take my first take profit, short-term sell side. Alright, took out the short-term sell side, but requires take a screenshot of this for the journal. Now I gotta be looking at the correct dealing range here. So I'm gonna imply a dealing range to get short in because we have multiple fair value gaps here. I'm gonna imply the new range from the smart money reversal to my ultimate target, which is Friday's low. Seems like we have the first fair value gap as a premium. Let's see how it reacts from there. 5 minute 5 minute SMT is inverted, but now we have a bigger one. Um, so what I'm looking at right now is I'm watching the 5 minute on the right top right. Um, Here's what I was mentioning yesterday. Although most of you were there, but like we had a distribution already. So the next one or two candles should be up close candles. I'm expecting a pullback here, which creates an order block on the 5. That's what I'm waiting for. PDL is taken out. Bullish SMT. I'm really not concerned about bullish SMTs here because of my daily like higher time frame bias. Those little SMTs will cause a deeper pullback, but overall I don't think it's gonna violate the structure here, the most current expansion. So in my opinion, ES will be drawn into PDL as well, and maybe if possible, Friday's low or it's CE. So I'm gonna annotate all that. Because at the moment on daily chart, what's happening is the market is in lowest sell stage of the market maker sell model. So this should push one more time to at least the short-term sell side before setting it up for the first stage distribution. That is the idea. Oh my god, where did it go? Okay, there you go. PDL on ES, pre-stay low on ES is also horizontal consolidation. So that is the highest probability target for me on ES. Let's see. This run on ES is pretty shallow actually. Nothing major here. There's a potential order block here actually might be rejected. Oh, wick there. I didn't see that. look at the C of this tail to see whether it acts quote unquote as a gap. So in the context of yesterday's class, you guys, because some of you were there, this is the SMR, trout logs, type 1 smart money reversal, breakout, confirmation is there, return back to origin, also the inversion fair value gap is state 0, lower sell. Now we should be in first stage distribution. So there's an order block here on the 1 minute on ES. Mean threshold is what I'm looking at. But I'm still willing to wait for a 5-minute order block to form. Yes is also about to get out of the breaker block from the daily chart, which is this one. It's retesting right now. This could reject right away as well. Seems like it's gonna reject there. So the high of New York Open is also the breaker block on the daily threshold. See that line? That's the breaker block's mean threshold on the daily. Okay, now 5-minute potential order block is forming at the moment. So these are the conditions where you need more confirmation, because now the order flow on the one is not as clean, so it requires a cleaner formation or a confirmation. That's a good reaction from the fair value gap. We got the 30-second chart. No fair value out there. Nasdaq 15-minute. Let's see. So yeah, I would take it from well, like these lows here. I would annotate the whole accumulation range here. It's smooth edges right there. Breakout is the confirmation of the change, and it returns back to range equilibrium and rallies. So there's end wall there. Let me see. Seems like it's respecting there. Okay, now here's when I take a look at the shorter dealing range to get a potential entry. So here is the first premium fair value gap. Oh wait, hold on. There's another premium fair value gap with a break block. Bearish SMT at the 1 minute high. Let's see. Where's the bearish SMT though? I don't see the bearish SMT here. This type of smart money reversal does not require SMT divergence. Trapped positions is essentially another reversal, which does not necessarily require SMT divergence. So when I see that kind of formation, my eyes does not seek potential divergences in the marketplace. Okay, so if that low gets tagged out, you consider the low at the original consolidation price should begin consolidating more. Yeah, but the exact level, there's no way to know. So it could be like 10 points lower than that, or right at that level, or 50 points lower than that. It kind of comes down into how high time frame also looks like. In this case, because I'm expecting an expansion on the daily time frame, I would expect consolidation way lower than that low, if that makes sense. Literally just watch the trap position section of your market maker model. Class 1, press spend time accumulating into BC, then invert it quickly at the market open. Yeah, that's a typical New York Open smart money reversal without Judas swing. Got a little consolidation below be trapped shorts here. It could be, I don't trust it though because that is not in the context of my personal game plan and bias. If you're in lower sell on the daily market maker sound model, there's no reason to look for longs for me, even for scalp. I mean, you can definitely like scalp this fair value gap and target this high. You can do that, but that's not how I trade personally. And if it rallies and breaks out of this range, here's what I'll do. Normally, what I do, I call it a day. I just move out, move away, and come back tomorrow. That's what I do. Because otherwise, think about this. If I'm bearish, if I want to short this, and if I see this going higher, and if I enter a long position, I'm not gonna trust that position. I'll be emotional. I'm not gonna be managing that position properly. So why would I bother even trading that? You know, that's my mentality. Cerebral should be nice and lower. That was gold. Thank you. By the way, I'm seeing your DM easy. I haven't looked at it yet. I was sleeping last night. The 1 hour. So before considering any cerebral entries, I always look at the hourly chart because essentially that's they open up the hourly chart. But I can see this. So there's a huge 4 hourly sell model at the moment. The short-term sell side from the daily chart is the actual liquidity pool on the 4 hourly. So I can see the next 4 hour candle really expanding into that level. I can see that panning out. The inversion pair value gap CE seems like top on that candle. So far, great reaction on the 5. I'm expecting this 15-minute candle to be a break, like an order block, or propulsion block rather, and act as breakaway gap for the fair value gap above it. Since how long have you had your entire trading plan on the rails that you've confidence in your system? I would say, like in terms of confidence, I would say the last like 2 years, I felt the most confident about with the models and all the trading out of 5. So the first 3 years was hell. The first 2 years I was not profitable. The third year I was profitable, but somewhat profitable. It was like not too much, not enough. You know, it was consistent, but not so consistent. If that makes sense. But the third year really, I really dialed in and started back testing like, on my third year. Can you guys imagine that? Before that, I did not back test. I wasn't back testing at all. And back testing changed everything. 'Cause it gave me the confidence I needed. Alright, this is the candle I want to see reversal now. I'm considering this as the hourly candle manipulation. So here's the 10 a.m. open. I want to see it violating that fair value gap, to be honest with you guys. Three drive. Yep, great catch. Usually missed three drives. So first high, second high, and third high. It's also trading into a 15-minute fair value gap as well. These are going to be the 5-minute order blocks. Now it's all about timing right now. It's all about lower time frame confirmation and timing of the entry. I'm just going to annotate this low here and see if it's reacting to that as well. That's not what I wanted to see at the end of the day. I didn't want to see this fair value gap getting violated. Just fine though. Oops, didn't mean to delete that. See how it closes there? Or is it going to be a mohawk? So ES is about to take the buy side, which will be essentially an SMT, bearish SMT divergence. The breaker could be the draw on liquidity on this buy side run. It is trading into breaker right now. I don't want to see it violating those trend lines here. And like I said earlier, if it rallies the highs from the storm and the reversal, if it reverses here, I'm definitely calling it a day. Just because, like I said, I would not personally be confident in long positions. Here's the ES order block. Do you know how many trades do you take on average per week with your system? Like normally or in these conditions? Because the answer would change a lot. Um, it really depends, but like more or less, I would say 3 to 4 usually. And so what I personally do is if I can take a position in the morning session, I don't watch the afternoon session. I just usually leave runners for the afternoon session. If it hits, it hits. If it doesn't, it doesn't. So I don't bother watching it. And the second thing I do is if I don't get an entry in the morning session, I come back for the afternoon session and try to see what's going on. It doesn't necessarily mean I execute on the following session. No, it really depends on the. So it really depends on the time of the delivery and the overall sentiment in the market. SMT with YM. Let's see. So SMT with ES is also here at the order block. Let me delete the breaker. I still want to see a confirmation though. Let's see YM. Wow, YM rated the highs, huh? Overall, pretty shallow rally higher. There's not much going on in that price action. Just like one order block here, fair value gap, and that's pretty much it. 5 seconds? You guys are hilarious, bro. I can't snap 5 second charts. Or like second charts in general. Looks like a micromaker sound model on the 5 seconds. Probably gonna try a short here with this fair value gap, guys. Let's see. 16. Need to get the CE or something. Yeah, I need to fill the CE of that fair value gap, which is about now. I'm gonna go short 2 contracts. Here, risk entry, worth a shot, in my opinion. Stop at highs. So I'm expecting. The idea is, I'm treating this as an order block, unconfirmed order block. So this is a risky entry. I don't have the confirmation just yet, but I don't think it should really keep going higher here. That's the idea. So I'm treating this order block as stage 0, lower sell. Wow, I got such a bad fill though here. Anyways, stage 0. This is what I'm anticipating right now. It's not confirmed like I mentioned. Order block, lower sell. So here's what I'm gonna do. Once it trades into, so right now it's at equilibrium. Once it trades into 10 a.m. open candle, I'm gonna set my stop at break even, because that might be the bounce that we were looking for. And I'm gonna trail my stop to the previous fair value gap low here to de-risk. Actually, not the low, but the CE right here. My first target is a short-term sell side at the lows of 930, 945. And the second will be the daily. I'll take a look at it afterwards. So the fact that it's respecting the old fair value gap here, the premium area, is not that good. But we'll see. Range equilibrium bounce is possible, which is why I did not put my stop loss at break even just yet. I want to see that break lower. And like I said, guys, this is not an entry with a confirmation. Okay, I want you to understand that there's no lower time frame confirmation on my entry just yet. Now, once it trades into 10 a.m. at open candle, my stop will be at break even at that point. And I do not require a candle close below it. One touch with the wick is enough. So let me take a look at ES as well. That's not a good reaction. Okay, now that we inverted the fair value gap, I'm actually going to trail my stop loss even further. If I find a stop loss right there at the high of 10 a.m. 10 a.m. candle. So it's at 115.5. Should not violate the high anymore. That's not what I want to see. Let's see, do we have an SMT divergence right now? No, we do not. I don't want to see price closing above this old fair value gap here. That's not the ideal scenario here in this case. Just because I don't have the confirmation yet. Trading equal is so disgusting, always up and down. That's true. The idea is though, so the reason I executed here without a confirmation using this order block is because I'm trying to catch the daily expansion at the end of the day. So if it's in the daily expansion mode, it should really like keep price higher and does not violate the bearish PD arrays. Now with this candle close, if it closes outside this fair value gap one more time, I'm gonna set my stop loss at break even at this point. So if this candle closes like that, it's gonna be a risk-free trade for me. Now here's when you need to be patient at this point. Gotta wait 45 minutes, seconds. We might get an S&T divergence at these highs also. Gonna be looking at that. $20 left. Moving my stop at break even here. It really shouldn't come up above this fair value gap anymore. If it does, it's probably going to be choppy or I'm wrong. So there's a thick price action here, which is causing the problem. See, this fair value gap, specific fair value gap, I don't want to see a candle close trading outside. Has to respect it. And I'm taking the risk of getting wicked out here. But, I would rather have a risk-free trade at this point than have a 16 handle stop loss because there's no lower time frame confirmation still. I'm gonna move one of my stop loss around here just because there's an SMT divergence I want to secure. Oh, never mind. Moved away. Trailing my stop even further. So this might be the bounce at 10 a.m. open. I don't want to see that. Here's what I'll do. This fair value gap. Now it should not get violated one more time. Let me see if we have SMT divergences at this. Now once it knocks out this range, it's over. So it'll be just distribute lower to the short-term sell side. Excuse me, guys. It's so hard to follow this price action though. It's too choppy here. I'm looking at AES. So here's the first low. I think it's the same low, right? Yeah. It's the second low. Now I'm gonna trail my stop again at the low because there is an SMT divergence at the moment. I'll probably trail it to CE of this fair value gap, and I'm taking the risk of getting wicked out there. But again, I would rather pay myself than getting chopped. So I'll do this one contract at the CE and the other one's at the high. This is not the usual order flow I normally trade in. This is not a clean 1 minute order flow. As of now, there is an SMT divergence at the lows at the moment. Because of that, excuse me, Nasdaq might not trade the short-term sell side. I'm going to trail my stop one more time. Let me see. I'm going to use here now the low of that fair value gap with CE, the second contract. And depends on how it trades the short-term sell side. I might leave runners, or I might take partial when ES takes out the sell side here. Which is probably what I'm going to do. Because there might be an SMT divergence at the lows here. Taking that the 5 minute. And once the ES trades into there, I'm taking one off. Also, I'm securing one more contract here. Something like there. It's a shallow run, so it's really tough to when it comes to position management. There's no PD arrays here or here. So I have to use the old fair value gaps and expect it, it holds the price below it. That's essentially what I'm looking for when I'm managing my position. So I better annotate them for that for you guys. So those fair value gaps, delete all that test, has to be respected. Here's what I'm gonna do. The safe stop though, if this was clean order flow, so this is what I would have done normally. The open of the 15 minutes, that would be my stop loss for both contracts. But because it's not the cleanest order flow that I normally trade, I'm not doing that at the moment. So that comes to, I was mentioning this yesterday. So when you're trading, guys, you have to be fluid because you're not going to be seeing the same price action every day at the end of the day. Yeah, I'm waiting for ES to take out the short-term sell side here. Then I'm going to take one contract off. And my stops get wicked out, but I really don't care as long as like, you know, it's risk-free trade at this point anyways. This fair value gap should not really be inverted at the moment. If it does, my stops are not going to be safe. Both of them. Let's see. I'm loving what you're doing. It's an entry in premium. Yeah, you gotta be patient with that. It doesn't have to trade into premium in this case, um, but sometimes it doesn't. And in that case, like you got to be looking at both assets and see like which one is weaker, which one is high, which one is stronger. And that way you can anticipate. I'm gonna move my stop again here because it violated the fair value gap right there. There's a volume imbalance there, but I'm not gonna take that risk. So you got to be looking at both assets and try to understand which one is weaker. Then you need to anticipate which one could trade into premium and which one couldn't trade into premium. If you know that, then you know the likelihood of getting an entry in a premium or in a discount. And that's what happened, I think, last week on Friday, if I'm not mistaken, Nazmi, when we were talking in general chat. NQ version 951 BC. Which one's 951? Oh, here. Yeah. This is how I spot market maker model. Okay, one contract got stopped. That's fine. It's not the cleanest order flow, so I don't care. Second one also got stopped out. That's okay. Let's keep watching the price though. Meanwhile, I'm gonna read. This is how I spot market maker sell model or buy model on the 5 second. It looks clean, but the thing is, when I was looking at the second chart, here's the confusing part. So original consolidation, another consolidation. Which one? You know, I mean, I get confused because I'm not used to trading 5 second charts. Maybe if I just dive in to this chart, I'll get used to it and I'll understand it better. But personally, if I was trading 5 second chart, I would be looking at the first original consolidation as the highest probability target. So what I want to do right now is I want to see if my original, like traditional stop loss would have gotten tagged out, which is essentially these the open price here. Seems like there's no PD arrays though. That's the problem. It would have getting tagged out. Great awareness of the market conditions. Yep. So I wish this was a clean order flow, so I would have showed you how I normally manage my stop. But basically, whenever it's a clean order flow, like just like this one, for example. Trade higher, right? Breaks lower, fair value gap, breaks lower, fair value gap, breaks lower. This is the clean order flow. That's what I mean by clean order flow until it raids the liquidity pool, right? So in these cases, what I normally do is if I shorted this one, it rallied, right? The moment it forms the fair value gap, I put my stop loss at above this range, which I utilize the open of this fair value gaps candle. Then the moment it trades lower, and what I do is I wait for one fair value gap or two fair value gaps. Once it forms, and I use this range for my stop loss. So I put it at like probably like here, using this low here, right? I broke lower one more time, another pullback, and then south side is taken out. So I don't trail it like normally super aggressively or without like looking at the PD areas or something. But in this case, there were no PD areas in both legs, so I had to use the old one, and I had to trust those fair value gaps. Now, once it broke, like you can see that, like for example, the lower one. So it traded below it, right? Now it should not trade above it. Once it did here, this candle closed above it outside. Now that's when I trailed my stop even further because I knew that because it was disrespected, the likelihood of price making a run like this one right here is more likely than not. Now that doesn't mean my bias was wrong. It can still pan out, but it's not a clean order flow. So I don't want to be a part of it. So I would rather pay myself quicker than not. So let's see what's going on here. Let's do tape reading here. Oh, I got you. I got you right there. Order block on the buy side of the curve being reused on the sell side of the curve right now because there are no PD arrays in this price action here. So that is the first stage distribution. And the second stage should target the daily sell side. Also, one more note, guys. This is normally not my entry model, but there's a reason behind why I considered this specific candle as an order block on this order flow and used this as a lower sell. It's mainly because I saw this algorithmic delivery, okay? But then once it traded below, like outside that fair value gap, after respecting, that candle was my confirmation for the lower sell. Now, by doing that, I'm trusting these wicks outside the fair value gap as mohawk. So I'm anticipating the damage has already been done, okay? And then I'm considering going short in that order block, which was not confirmed order block at the time. That's the risk you're taking on, and that's more advanced entry. So by no means I'm expecting same kind of entry from any of you. Can you put your annotations in the chat? Like you want me to send the charts, like the screenshots? The thing is, so here's the thing, bro. Sure, I'll do that. Normally, I have a bot which automatically sends in the general chat whenever I have a position or the annotations. But the problem is with that bot, it doesn't show the pictures if you have an Android phone or Android PC or whatever. So I stopped doing that, but moving further, I'll do it manually for sure. That's a great point. Thanks for the feedback, bro. I'll send it right now. Also, one more thing. When I take a screenshot with the wide screen, just like this one, does that cause any problem, or would you rather have me taking it like in the normal frame ratio, like this one right there? Okay, okay, cool. I'm sending it right now. So let's do this. So I'm sending the 930 first. It's in my channel. And this is the second one. Let me clean it a little bit though. Here, this is the trade. Actually, let's do it this way. Because at the end of the day, that was an execution. Okay. You see now it became choppy. SMT diverges at the lows, which is a suspect. I remember when, oh, I think I missed a couple messages here. Starts at the lower time frame. I mean, starts at the lower time frame. Oh yeah, that's for sure. Like, you can even look at the micro breaker models on the 1 second chart as well. Like, because time is fractal at the end of the day. It's just basically like personal preference. Like for me, I don't look at the microsecond charts, although I know the model starts from there because time is fractal. But the main reason for that is, for my personal opinion, for my eyes, the cleanest I get is usually 1 minute or higher. Like for me, it's the easiest time frames to spot the trades or the framework. I remember when ICT said you could trade every time frame because the algo repeats. Yep, you're not gonna have the same targets. That's the difference. That's the only difference probably. Overall, it really looks like the same. Like whatever you see, like here, if you don't know that this is the 1 minute chart, it can be any time frame at the end of the day. Do you agree that at the premium fair value gap that got the short, there was a bearish SMT with the S? No, there was not. I think. Yeah, there's no SMT. So SMT divergences. I'm gonna take out the note for you. I think you're having a problem with the divergences. Um, give me 1 second. I'm looking at it. So TJ, can you see the screen? Just let me know if you can't see the screen. TJ, give me a thumbs up if you can see the screen. No, no, no. I'm asking TJ because he had a problem watching the streams for some reason. No, he's asking SMT divergences. I want to show him this figure here. Just need a green light from him. So Thor, do you know why at 9:30 there is 90%, 80% of the time a reverse? So 9:30. So what do you mean by a reverse though? Because reverse, like you mean it rejected here and wicked all the way almost at the to the buy side. Is that what you mean? Oh, 10:30. Um, so correct me if I'm wrong, but I think 10:30 or 10. I'm not sure if it's 11 or 10:30, but one or the other is London close, if I'm not mistaken. And I have not, I haven't really noticed reversals at 10:30. I need to look into that. I want to mention something here though. Like today's execution was really a good execution in terms of like I was wrong here, right, about the drawn liquidity, but I still made money. Why? Because I was less wrong, and that's what's important when it comes to day trading. You have to be less wrong. You don't have to be like 100% right about the market, but if you're less wrong, the likelihood of you making the something while being wrong is more likely. TJ, all right, I need to tag him probably. It's popping out now. ES is going for the 9:30 morning high. So there is a lower time frame SMT diverges at the lows here. And the lows, that's probably setting up the stage for buy side delivery. There's also another SMT divergence, something like this on the higher time frame. I see probably 15-minute. Yep. So here, the 15-minute SMT divergence. It'll be interesting to see how the 15-minute divergence will pan out. It feels like now I'm looking at the hourly chart. I think what's gonna happen is I just can't see this changing the market, like the sentiment and the price structurally. So the order block here, I think it should be respected. I don't want to see it rallying high above it, and I think that's not going to be the case. Probably the CEO of the order block wick or the rejection block here is going to be, oh, what's happening? It's going to be the drawn liquidity on the buy side delivery. So either or. I really don't want to see the structural shift. You can also look at this fair value gap as well from Monday. Maybe CE of that fair value gap could be the drawn liquidity as well. And let's take a look at NASDAQ. Same deal. That order block is definitely not going to get violated on NASDAQ just because it's the weaker pair at the end of the day. There might be an SMT divergence at the highs over there. Coming off and on today, I think the network is fucking me up. Okay. Here's what I'm gonna do. No, I can clear the chart now. This is also violated. I'll take that out. Kind of turned into a seek and destroy profile now that we have SMT diverges on opposite sides. It's usually when market starts chopping. So on ES, this is the high I was looking at, I think. On the hourly. Oh no, it's not that one. Looks like there is no consolidation though. So 5 minutes SMT. Or like 15-minute SMT, 5-minute SMT, original consolidation is clear on the 5. And it's rallying there. There's also one more confirmation here in this price action on the lower time frame. About to take that out. But here's the thing, I don't believe NASDAQ will do the same. It's gonna be a bigger SMT divergence at the highs in my opinion. So the high from the morning, smart money reversal high on Nasdaq should not be traded into if Nasdaq still wants to run the daily sell side. So if it trades above trout longs, which is 152, the sell side idea is gone for the day. So it kind of kills the narrative. The bias might be still there, but it kills the narrative. So I would rather have SMT divergence at those highs here on the bigger picture, like probably 5 minute here, for a potential short setup in the afternoon session. But for now, I think I'm gonna call it here, you guys, because I'm really not interested in the buy side delivery today, and I really can't see what could potentially pan out. The highest probability I can see is ES running into 5208, which is almost get tagged. Nasdaq maybe touching into the old fair value gap low one more time, creating an SMT divergence using the CE of 9:34 a.m. candle, causing an SMT and going lower. This is what I see panning out at the moment. There's another chance of violation of the high, but in that case, the down close candle from the morning session becomes the order block, right? I don't want to see that. But in the event of that getting violated, it could actually rally all the way above into CE of this fair value gap from 7 a.m. and touch the range low here, old thick price action, and that's the furthest it should really go. It should be a turtle soup though, otherwise it's going to confirm the 9:30 candle, down close candle, as an order block. Yeah. So yeah, guys, I'm going to call it here. I'll probably be out for the afternoon session, but if I see something, I'll let you know. And about the yesterday session, the class, I have not recorded it yet. I'm gonna do it in about like an hour or maybe like in 30 minutes or so today, and hopefully I'll be uploading the class recording probably like within 2 hours, 2.5 hours, but definitely gonna be today. So thanks for coming by today. You have a wonderful day.